Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's December 27th. We got another light day today. If you haven't figured out by now, typically on the time between Christmas and New Year's is typically the slowest time of the year for trading, and that's primarily because most of the traders, those trading houses are empty or very light staffed. Most of them are off still on vacation and won't be back till first of the year. So, but we still do get economic data. We still got day traders and stuff like that. Still things going on. We got like treasury auctions and stuff like that going on. But it'll be pretty light for the most part here. Today's economic calendar consists of the consumer confidence level for the month of December. So our last reading was 129.5. Now it was supposed to dip a little bit to 128, and it dipped a little bit further than expected. It came down to 122.1 here. We also got pending home sales, complete different of the spectrum here. We had a 3.5% increase from October to November, and I'm sorry, for a month of October, and for the month of November it was supposed to dip 0.5%, but it went up 0.2%. So things kind of cooled off a little bit in the month of November, which is pretty typical because obviously home sales most of the time is for sales or for most of the time it's for summertime. People are moving during the summer, and sometimes it get extended into October, and it probably got more of that because of the the hurricanes we had around the month of September. So some of those numbers got probably pushed over to the month of October, which kind of had that nice increase of 3.5%. But it didn't drop. It went up 0.2%. So that's still a good sign right there. Stock market's up. It looks like we'll be up for the month. What I was reading, it looks like every month of this year, which might be a first, that the stock market was up. We had a positive month, which, if I remember right, the last time I saw, the stock market for the year when it was up about 25 points, which is or 25%. So again, seeing a lot of new records here. It's been a good year for the stock market here. So let's go ahead and take a look here at the bond market. Bond market, we got a nice little rally going on here. We're up about 20 basis points. We're just getting above this first level of resistance. If we could stay above this, as you can see here, the next line that could cause the interference or create a ceiling would be here over at the 25-day moving average here. And so it gives us a lot of room here to see some improvements here. So let's kind of wait and see how this portrays. But so far this morning is looking quite well for us here. And on the other hand, the treasuries are kind of dropping. So you see this kind of dropping down below here. We're currently down about 4 basis points down to about 2.43 range here, and kind of approaching the 2.42 range here pretty soon too. So it's kind of in that between 2.42 and 2.243 range on the 10-year treasury. So again, so far looking well for at least mortgage-backed securities, or at least for interest rates. So rates are showing an improvement today. So we have an improvement in interest rates today. Stock market's up a little bit, but it is again at very light trading. Basically that wraps up the day. We're going to keep these pretty much short and sweet, as this is pretty much a light week. First of the year, they'll probably be looking for a new cataclysm to kind of rally around, as we've already passed the tax bills, already gone through, and they'll probably be looking for something else that's going to try to drive the market. So probably won't know that until another week or so, once the shares are back. All right, so if you guys want to get more updates, just come over to Twitter. I am posting on Twitter even this week. My handle is Mike Bjork on Twitter. Have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.